Hey there, money-hungry viewers, welcome back to another exciting episode where we dive deep into the world of finance and investing. Today we're talking options, those powerful little contracts that can supercharge your portfolio. Options can be a game changer if you know how to use them correctly. They offer flexibility and can be used for hedging, speculation, or even generating income. Think of an option like a coupon for the stock market. Just like a coupon gives you a discount on a product, an option gives you the right to buy or sell a stock at a predetermined price. It gives you the right, but not the obligation, to buy or sell an asset at a specific price, the strike price, before a certain date, the expiration date. This means you have the flexibility to make a move if the market conditions are favorable. Now let's talk indexes. Indexes are essential tools for investors, providing a snapshot of market performance. You know the big names, the S&P 500, the NASDAQ, the Dow Jones Industrial Average. These are the benchmarks that investors look at to gauge the health of the market. These indexes are like giant baskets of stocks, representing a whole chunk of the market. They include a variety of companies from different sectors, giving you a diversified view of the market. But here's the kicker. Some indexes are cash settled. This means you don't have to worry about the logistics of buying or selling the actual stocks. That means when your option expires, you don't have to deal with actually buying or selling all those stocks in the index. Instead, you just settle the difference in cash, making the process much simpler and more efficient. You just settle up the difference in cash. Easy peasy. This can be particularly advantageous for those looking to avoid the complexities of stock transactions. So, what happens when you combine options and cash-settled indexes? You get a powerful strategy that can potentially generate consistent income. You get a recipe for potential monthly income. By strategically using options on cash-settled indexes, you can create opportunities for regular earnings. Stay tuned, because we're about to break it all down. We'll explore the ins and outs of this strategy, helping you understand how to make the most of your investments. Alright folks, let's talk about selling options. It might sound counterintuitive, but selling options is like being the house in a casino. You're betting that the market won't move drastically against you. When you sell an option, you receive a premium up front. That's your profit right there. But remember, with potential reward comes risk. If the market moves against you, you could be on the hook for a loss. But don't worry, we're not talking about gambling here. We're talking about calculated risk-taking. By understanding how options work and using smart strategies, you can minimize your risk and maximize your profit potential. So, are you ready to be the house and rake in those premiums? Let's dive deeper. Remember those cash-settled indexes we talked about? They're the secret sauce to generating monthly income with options. See, when you sell options on individual stocks, you're at the mercy of that one company's performance. But with indexes, you're betting on the broader market. And let's be real, the market tends to go up over time, right? Plus, with cash-settled indexes, you don't need a ton of capital to get started. You don't have to worry about buying hundreds of shares of different stocks. You're just dealing with cash, making it a more accessible strategy for many investors. So, are you ready to ditch the stress of individual stocks and ride the wave of the broader market? Let's find out how. Here's where it gets exciting, folks. By selling options on cash-settled indexes, you can potentially generate a steady stream of monthly income. How? It's all about those premiums. Let's say you sell a call option on the S&P 500 with a strike price slightly above the current market value. You collect the premium immediately. If the index stays below your strike price by the expiration date, you keep the entire premium as profit. And guess what? You can do this every month. Sell options, collect premiums, repeat. It's like clockwork, baby. But before you start dreaming of yachts and private jets, let's talk about the potential gains and the risks involved. Section 5, the upside, potential gains, and happy dance. Alright, time to talk about the good stuff, the potential gains. This is where things get exciting. When you sell options, you're not just playing defense, you're also setting yourself up for some solid offensive moves. While selling options isn't a get-rich-quick scheme, it can provide consistent income and even boost your overall returns. Think of it as a steady stream of additional revenue that complements your existing investments. Remember those premiums we talked about? They are essentially the price of the option that the buyer pays you. And guess what? You get to pocket that premium up front. They can really add up over time, especially in a sideways or slightly bullish market. And the best part, you don't need the market to skyrocket to make money. Even in a stable market, those premiums can accumulate nicely. You get to keep the entire premium if the option expires worthless. This means if the option isn't exercised by the buyer, you walk away with the full amount. It's like getting paid for a promise you didn't have to fulfill. But here's the thing. The potential gains depend on several factors, including the chosen strike price, the time until expiration, and the market's volatility. Each of these elements can influence how much premium you collect and your overall strategy. So, while you shouldn't expect to get rich overnight, selling options on cash-settled indexes can be a powerful tool for generating consistent income and enhancing your portfolio's performance. It's a strategy that, when used wisely, can bring a sense of stability and growth to your financial journey. Section 6. Risk reality, check, volatility, and potential losses. Now for the not-so-fun part, the risks. Look, I'm not going to sugarcoat it. Selling options involves risk, just like any other investment strategy. The biggest risk? Market volatility. If the market moves sharply against you, those options you sold could become liabilities, potentially leading to losses. And here's the kicker. Your losses can theoretically be unlimited when selling call options. That's why it's crucial to have a solid understanding of options trading and to implement risk management strategies. But don't worry, we're not leaving you hanging. In the next section, we'll discuss some strategies to mitigate those risks and protect your hard-earned money. Section 7. Safety net strategies to keep your money safe. In this section, we will delve into some of the most effective strategies to ensure your investments are protected. Whether you're a seasoned investor or just starting out, these tips will help you navigate the complex world of finance with confidence. Okay, so, we've talked about the risks. The financial market can be unpredictable, and it's crucial to be aware of the potential pitfalls. But knowing the risks is just the first step. The real challenge lies in managing these risks effectively. Now let's talk about how to manage them like a pro. It's not just about avoiding losses, but also about making informed decisions that can lead to substantial gains. A well-thought-out strategy can make all the difference. First and foremost, never invest more than you can afford to lose. This golden rule ensures that you won't find yourself in financial trouble if the market takes a downturn. Always have a safety net in place. Options trading should be a part of a diversified portfolio, not your entire investment strategy. Diversification helps spread out risk and can provide more stable returns over time. Think of it as not putting all your eggs in one basket. Second, choose your strike prices wisely. The strike price is a critical component of options trading, and selecting the right one can significantly impact your potential returns. Take the time to analyze market trends and make informed choices. Selling options further out of the money generally means lower premiums but also lower risk. This strategy can be particularly useful for conservative investors looking to minimize potential losses while still participating in the market. It's all about finding the right balance for your risk tolerance. Every investor has a different comfort level when it comes to risk, and it's essential to tailor your strategy to match your personal preferences and financial goals. Third, consider using stop-loss orders. These orders can be a lifesaver in volatile markets, automatically selling your options if the market moves against you. This way, you can limit your potential losses without constantly monitoring the market. These orders automatically sell your options if the market moves against you, limiting your potential losses. And finally, educate yourself. Knowledge is power, especially in the world of finance. The more you understand about options trading, the better equipped you'll be to make informed decisions and manage your risk effectively. Continuous learning and staying updated with market trends can give you a significant edge in your investment journey. Section 8. Index options versus stock options, which is right for you. Now you might be thinking, Jim, why index options? Why not just sell options on individual stocks? Well, both strategies have their pros and cons. Index options offer diversification and a way to bet on the broader market, while stock options allow you to capitalize on the performance of specific companies. Index options are generally less volatile than individual stock options, making them a potentially less risky option for generating income. However, the potential gains may also be lower. Ultimately, the best approach depends on your individual risk tolerance, investment goals, and market outlook. Section 9. Final thoughts. Is this your ticket to monthly income? So, there you have it, folks. Selling options on cash-settled indexes can be a viable strategy for generating monthly income. But remember, it's not a get-rich-quick scheme, and it involves risks. Before diving in, educate yourself, understand the risks, and develop a solid risk management plan. And as always, consult with a financial advisor to determine if this strategy aligns with your overall investment goals. Now go out there and make some informed investment decisions. And remember, bulls make money, bears make money, but pigs get slaughtered.